Hello, good morning and welcome. You are watching The Mining Show, brought to you by Blytheway on Core Finance. I'm Charlie Gibson. Now, as everyone knows, in the world of mining, almost the holy grail of a lot of companies is to do some sort of corporate acquisition. An acquisition, possibly a disposal, but a corporate event, as it's called, nonetheless. Well, I say that's often the holy grail. Not always, it seems. In this particular case, Stratex has made a bid for an Australian company called Crusader, and I would say they were dissident shareholders, but that probably wouldn't be fair. In fact, a lot of the mainstream shareholders' names, such as AngloGold Ashanti, Teck, and Antofagasta, don't seem to be happy. Well, the chief executive of one of the group companies, this is called Thani Stratex, is joining me now. His name is David Hall. David, very good morning to you. Thank you very much indeed for joining us. So tell us, what's this little spat all about? Because usually a company buys something, everyone thinks it's good, great, we're buying an asset, we're buying a project, we're moving the company forward, and in this case, you don't think that.
No, well, good morning, Charles. Thank you for having me. Yes, I think the key thing about this deal is that it's highly dilutive for Stratex shareholders, basically 81%. And so from Crusader point of view, it's an excellent deal, but from the Stratex shareholders, it isn't. There is considerable, as you mentioned, the shareholders like AngloGold Ashanti and Teck, who actually did advise the board when they signed the heads of agreement that they weren't in favour of this, and then the board still decided to pursue it and sign the scheme of arrangement and have been moving forward. At that point, AngloGold and Teck asked myself and Paul Ford, my colleague, would we pursue the matter and take it to a resolution and try and kill the deal. And that really was on the basis that it was a very, very poor value. And the key thing about Crusader, they have their assets in Brazil, which again is a whole new area for Stratex to move into. It's been started in Turkey and then worked in Africa. So flipping all the way over to Brazil is a major strategic change. Stratex is not a mining company. It was made its name in exploration development or project generation, so that's another factor. And at the end of the day, Crusader as a company has been in Brazil for over 12 years and not yet developed these assets. At the moment, when you look at the financials, Crusader actually is insolvent, and Stratex is loaning it money while this process is going on, and in addition is paying them a 63 premium for the privilege.
A 63% premium on their share price.
On their share price.
I notice, though, that the stock in Australia is not trading at the level that implies. So that sort of suggests that Australian shareholders don't believe that this is going ahead.
I think that may be the case. I really can't comment at the moment. But yes, I mean, you'd be easier to buy Crusader on the market than wait for this deal to go through. But also in the deal is that the Stratex has a number of assets, including Thani Stratex and also the Delphin project in Senegal, where it spent a considerable amount of money. It did previously have an interest in Goldstone, an AIM-listed company, but they actually only sold that last week, which was a bit of a surprise, considering they didn't really need the money. And those assets are not being valued in the deal whatsoever. But essentially, it's treating Stratex as a cash AIM shell.
So this deal, in your opinion, undervalues Stratex because
Absolutely.
It doesn't include a value for those assets that you're talking about, and it overvalues Crusader. And presumably, if Crusader's insolvent, you should be buying these assets dirt cheap. If you look
Should
at
be.
this fund.
That's why we don't understand it. I say that's why it's as a deal, it doesn't really make a lot of sense for the Stratex to look at, especially when they've been heavily diluted for the privilege.
Tell us a little bit about this asset that you would be buying. If Stratex bought Crusader, and it would be buying its principal asset in Brazil is called Bomba Rana.
Yeah.
What can you tell us about that asset?
Well, again, I just say I've not been on the ground. We've read about it. Bomba Rana, I know, has been around for a while. It's about 1.4 million ounces. It's at a pre-feasibility stage. Another factor, the plan would be for them to take it to feasibility study, which of course then would require further funding over and above having completed the deal. And a bankable feasibility study could require $10–15 million, and another couple of years, and then you've got the mine building and development, which again somewhere the capex could be anything north of $80 million. So, I mean, the future value, if there is any, is a long, long way down the track. And as people are well aware, I mean, building mines is not an easy thing. And there are issues, I think, around the mine in terms of access. They've talked about shrinking the pit because there was a road which traverses part of the ore body. So there are issues there which haven't been raised. But over and above that, really, the thing is, it's the deal and the heavy dilution of Stratex for this is what really has got the shareholders saying we don't like this particular way, and also to see a different strategy. They don't believe Stratex should go to being a mining company in Brazil.
So what you're saying is not only is this the wrong asset, but it's also the wrong price as well, if you want to put it like that.
I think so. That's where shareholders are saying that, exactly that.
It is quite interesting though, isn't it? Because this actually then makes Stratex an exploration company that actually the shareholders don't want to go into mining. And usually, again, the holy grail is you have a prospect and you develop it and you invest in it and you turn it into a mining project at some stage. But what you're saying is actually Stratex doesn't have a history in doing this, and it doesn't have the mining capability. It's very good at what it does, which is exploration and development, but actually you don't want to take it into mining.
Well, again, that is a prospect generator model, is that you bring in strategic partners who financially de-risk the projects, which of course, exploration is a risk game, and you can't guarantee anything. So, 9 times out of 10 you'll walk away from a project, but it's better to use partners' money rather than taking money off the market and diluting your shareholders. And that's a strategic partner, and that's where we have. I mean, originally AngloGold Ashanti came in as that partner. That was based on the new epithermal discoveries in the Rift Valley, which are now in Thani Stratex Resources. Teck was a founder shareholder, and Antofagasta came in as a strategic partner in Turkey in doing project generation for porphyry coppers in that neck of the woods. So we've got 3 major companies, all strategic partners, all with ideas on copper, gold, and basically across the board in terms of tech.
So tell us where we are at the moment, because the current chief executive of Stratex itself, Marcus Engelbrecht, he's mad keen on doing this Crusader deal, isn't he? And then you've got you and you've got the shareholders, and you're saying no. So where do we go from here?
Well, again, we did approach, AngloGold and Teck did write letters at the heads of agreement stage asking them to not pursue it, and they did. Paul Ford, my colleague, also met with them and asked them to reconsider, and they moved ahead anyway. So I think a lot of people are unhappy that the board moved when they already knew that there were some major shareholders against the deal, and that has to be addressed. And really, I think from the shareholders' point of view is, why was the board doing that? They feel very unhappy, and then the concern also is loaning money in the process to Crusader, which is Stratex money to keep a company afloat while they're trying to acquire them. So that also has raised the shareholders' wrath somewhat, and people don't understand it and are very upset by it.
So where we got to at the moment, and there is now, so there's a resolution to hold an extraordinary general meeting?
Well, it's a general meeting.
A general meeting next week,
it's
is that right?
Week today, 1st of November, yes.
1st of November. And is there a motion of, what's the motion being put forward?
The motions on one is to kill the Crusader deal. Straight.
And that presumably means removal of the
then again, yes,
the chief executive.
The board, certainly chief executive and chairman, have pursued this deal. The resolution is to remove the chairman and CEO, and then to replace by Paul Ford, my colleague, as chairman, and then I would step in as CEO as well. So 5 points, 5 resolutions to be passed.
Okay, so at the moment you're presumably in a proxy battle, are you?
It is a proxy battle, yes. I mean, it really is letting the shareholders have a say in the running of the company, which is a general trend these days. People are saying, the shareholders should get more involved. In this case, they have. And they're standing up for what they believe is a poor deal, and they want to see a different direction. So,
but if there are any shareholders out there watching at the moment, you want them to, when they get their proxy cards, or you either want them to come to the meeting, fill in their proxy cards, and you want them to vote for the resolution, that the chief executive should be removed,
yes.
This deal should be killed.
That's correct, Charles, yeah.
Okay, David, thank you very much. I think that's all we got time for, but it's a fascinating situation. We will watch that vote at the general meeting. It's next week, it's next Wednesday, 1st of November. All right, ladies and gentlemen, I'm afraid that's all we got time for. That was David Hall, the Chief Executive Officer of Thani Stratex, and I suppose it'd be fair to say probably the prospective Chief Executive Officer for the whole of Stratex. As I say, I'm afraid that's all we've got time for, but if you're a shareholder, there's a general meeting next Wednesday. Get involved, make your voice heard. You can either do it by proxy, there are any number of ways you can do it, or you can do it by turning up to the meeting actually. I shouldn't do this, David, I'm going to cut back to you quickly. Where is the meeting being held?
The meeting's been held at the offices of Grant Thornton in Finsbury Square.
Finsbury Square, so there you are.
9:30 on the morning.
9:30 in the morning, so that's in the heart of the city of London. Ladies and gentlemen, thank you very much indeed. I'm Charlie Gibson, signing off for the Mining Show, brought to you by Blytheway on Finance. Until next week, have a very capital day.